This is CMA video series, CMA Part 1, Unit 4. We will discuss today cost accumulation systems. Broadly, we are going to discuss four types of systems. First is the job order costing, then process costing and activity-based costing, and in the last we are going to discuss the life cycle costing. Before I go in detailed discussion, shortly we will discuss each costing system and what is the need and how we can accumulate the different system. Cost accumulation means how we assign some price, some cost to a product. For example, this is a product, it has material, it has labor, and with some few things we can see here that is directly identifiable, but certain expenses are indirect expenses which are not directly identified we cannot see in this product. For example, the CEO salary, the CFO salary, administration secretary who is listening the phones, and the security guard standing out of the office, who is very important to run the function of the company, but surely we cannot see it here. We can only see the material, and we can assume that who made it, how much he could charge for that one. So the problem comes when the company wants to make one cost on which they want to add certain margins and they want to sell on profitability. When we talk about cost, we have direct material, we have direct labor, and then we have overheads. Overheads are difficult to assign to the product. What could be the basis? What could be the methods? There are different school of thoughts involved. Some people assume that the cost is any cost which is only variable cost. So this is a separate school of thought that believe marginal costing. One school of thought, they say no, variable cost is a cost, but surely the fixed cost which make this variable cost to happen, so we take the total cost which is equal to fixed cost plus variable cost. This is one method. Now certain types of productions has certain type of cost system. For example, if we receive some order for one product and this product is only isolated in its nature and the next order will be different from that one, we classify this product as a job. This job has to be costed in a specific way. We should know what is the material, what is the labor, and how the overhead will be allocated to this job. Then suppose if the product is different, we are talking about oil industry, that is a continuous flow as is there, and we have to convert into other shapes. So for that kind of cost systems, we cannot apply the job costing. We have to go for a process costing. What is a process costing? For when we extract some oil, we have to process. It may be multiple processes. So we will take one process, we will get one carried down balance from one process and put it as a brought down for another work in progress. And then this is how we reach to a cost which will be the base for the process costing. Apart from these two, these are the traditional methods of costing. We have a sophisticated method of costing as well, which is activity-based costing. Now, because of information technology and the systems, we are in a position to get the accurate allocation of the overheads. So this ABC costing, that is activity-based costing, stresses on the cost drivers, and we go in this discussion that which thing cost this element, and we identify the cost drivers and we allocate in the cost pools. This is we are going to discuss in details how activity-based costing works, how we calculate the cost into that in that method, and in the last we are going to discuss the the life cycle costing, which we assume that every product has a life cycle, and based on that life we allocate the cost. Starting our discussion first from what are the types of product costing systems we have. First of all, we have job order costing, then we have a process costing. A company produces many units of a single product. This is and one product is impossible to differentiate from the others. Means this is for the similar kind of products we have to apply the process costing. Then the identical nature of each unit of the product enables to have some average cost per unit. Then what is the example? Examples are paper manufacturing. Then we have the bottle fillings of any company for the beverages. Opposite to that, we have a job order costing system, which is for one specific job, and many different products are produced in this system. Products are manufactured to order, and the unique nature of each order requires to have a specific cost allocation to get to unit per unit cost. What is the example? Example is if you are making some aeroplane or some you are in a construction industry or you are making some video. This is one specific job. You have to see what material, labor, overheads, indirect, direct, or how it is to be put it into the product cost. Then this is how we compare the job order costing and the process costing. These are the point. Number of job works, we can have multiple job orders, but in process costing we have only single product, which is we are processing based on the supply, and cost accumulated by job in this system. But in process costing, this is by department. Suppose we are making the textile products, we are having certain department, the cost from one department will shift to another department, so based on that we will process that. And average cost is by job, and this is by department. Now let's discuss job order costing. Job order costing is a system to find a cost of a specific job. It starts from direct material, which is directly traceable to the job. We can see, suppose we get the order for 100 units to make the shoes, we need 100 soles. So 100 sole is the raw material. Then direct labor is also very clear. We call someone a cobbler, he will start making stitching the shoes. So this is we know. But it will go in the job. But what about the overheads? Because we have a factory, we are going to pay the rent, salaries. How it should be allocated? This is the concern only for us to allocate the accurate per unit cost of a specific product. So in that manufacturing overhead applied to each unit, we will use a predetermined overhead rate. What is that rate? Is in fact we have certain ways to determine the per unit overheads. It may be actual, it may be standard, it may be based on the experiences. We know that this much overhead generally we consume. That's based on that experience. Surely we are going to have a predetermined overhead, which we will put it into that one. Now we have to extend the flow of the job order costing. We receive order from the customers, it goes to a scheduled job, and then we order the material for making this job possible, and production goes in its real form. Then how it works, we have direct material for job one, then we need labor, it's a manufacturing overhead has been required. So this is how things go on. And manufacturing overhead include indirect material, indirect labor, and those we have to allocate on the full cost of per unit. Then how it works, it starts first of all, a material acquisition form is to be made, and it is to authorize the need. First of all, we will request for the material. For material extracting from the warehouse, from the store, we need to fill this material acquisition form. It will show all the units, quantities, what they want, and then we will have one. This is the format. It shows everything. What is the job number and this. Then it goes to a job order costing, where we are going to have a ticket. This is a time ticket which explain here time, direct labor, hours, amount, and the hourly rate. From this sheet we are going to get the direct labor cost. And from material acquisition we know the direct material information, and then surely we need to add the manufacturing overheads. How to use these overheads? We need to have one predetermined rate based on the situation. It is impossible. It's impossible to give accurate overhead based on our infrastructure, our machinery, depreciation. So many expenses are there, so we cannot allocate on the specific basis. We have to be a little realistic. Manufacturing overhead consists of many different items, and we have to understand this, how to calculate the predetermined rate. The formula for this one is estimated total manufacturing overhead cost for the coming period, and we have to divide it with the estimated total unit in allocation base for the coming period. So it will give us a predetermined overhead rate, which we can use in the job order costing. And for overhead applied, we can have the same predetermined overhead rate into we can multiply with the actual activity, so we will get the rate out of it. Let's summarize the document, and this is the process of cost accumulation in summary form. And this is the raw material, this is wages payable, this is manufacturing overhead controls. This goes in work in progress here, and from work in progress and manufacturing overhead applied, it's come here, and from that we will process everything into a finished goods, where the production will be formed in the real. For any kind of spoilage, we have certain treatments, like if it is a normal spoilage, it is no need to worry about it. But if it is abnormal spoilage, we have to give a treatment to that one. And when the job is complete, all cost we will transfer to the finished goods. So in general, job order costing system is a system which based on the specific order, it takes direct material, labor and overheads. For overheads, we use a predetermined rate, which is quite logical to have the cost of the product itself.